We've been talking about the coronavirus outbreak and what it's meant for the economy. It's obviously amplified concerns about weakened global demand for oil. This morning, you see WTI trading down by about 33 cents to $50.62 a barrel. It's down more than 19% just over the last month. Joining us right now to talk about this and much more is Michael Wirth. He's the CEO and chairman of Chevron. And Michael, thanks for being here today.
Pleasure to be here.
Let's talk a little bit about what's happening to the global demand outlook. Do you have your own internal kind of measurements on what you're expecting at this point?
We do, and we're watching this very carefully. It's clear that demand for air traffic, marine freight in and out of China is off considerably. Normally this time of year, we see some demand shifts with the Chinese New Year. Obviously, this one is amplified, and commodity markets reflect that. I think still early to say how this will play out as the news about the virus continues to evolve.
Any of the guidance that you've put out there, is that based on $50 a barrel or higher?
We laid out a slightly higher number, but we work across a range of prices and have really sized our company now and our operations, our investments, to compete in an environment that looks like the one we're in now. You know, we came off from much higher prices earlier last decade and have made a lot of changes, capital discipline, cost discipline. So we're well prepared for a market like we see today.
The write-down, the big write-down that you guys took in the last quarter was really more related to natural gas prices and just kind of looking at some of your assets across that base.
We're making capital choices across our portfolio, and some of these assets were acquired at a time when gas prices were stronger and looked like they would be stronger. Obviously, in the U.S., with the changes in unconventional production and fracking, we've seen a very well-supplied market, and these are investments that would struggle to compete within our portfolio versus other things. And so we made some choices really about how we're going to invest our capital.
Which is what? Lay that strategy out for us. Where do you think the best places are? It's here
certainly in the United States. We're investing several $1 billion a year in West Texas. We'll be cash flow positive in the Permian this year. And we have many decades of drilling inventory we see just in the Permian Basin alone. But we have a global position and have good opportunities around the world as well.
Do you think that the industry itself will be funded sufficiently for operations and exploration and production for the next 10 years? And the reason I ask is that, you know, people like Jim Cramer have made the point that young people don't want to have anything to do with oil companies. They don't want their 401ks invested in oil companies. That pension plans are starting to view investments in hydrocarbons as almost toxic, like tobacco stocks. I worry about 50,000 flights a day of using jet fuel. We mentioned what it was like when we had a disruption because of a hurricane on the East Coast and the lines at the gas stations. And people were bringing guns just to try and get their gas tanks. And I mean, I understand where these woke people want to get, I guess, but I don't know how, you know, a windmill is going to take me across the Atlantic unless we go really slow or something. I mean, are you going to be funded? Is this something that could hurt the industry's efforts to supply the world with cheap oil?
Well, certainly there's been a lot of attention around this issue as of late. We're well funded today. I expect to be well funded 10 years from now. The reality is the world runs on the energy system that we have today. And I think the comparison to tobacco is actually not an appropriate one at all. If tobacco use were ceased today, I think the world would be just fine. If we ceased use of all hydrocarbon products today, the world would not be fine. And I think that's the reality. Look, we're working on making energy more reliable, affordable, and cleaner, and we always have and we always will.
Are the stocks never going up again because of that?
No, I think they will. We've been in a rough period of time. Commodity prices had a historic collapse last decade. They're still very low because we've got a well-supplied market, and I think companies have had to resize their investments accordingly. We generated tremendous cash flow last year. We raised our dividend 8% last week. We're buying back shares. We're reducing debt. And last year, we produced more oil and gas than at any point in 140 years of our company. So,
but that was Jim's point. Jim's point was you're doing all the right things. You're not getting credit for the buybacks or for any of these other big things that you've kind of put into it.
I think we just need to continue to deliver results quarter after quarter, and I think the investment will be there.
All right, let's talk about the bigger issue. You point out that oil prices, commodity prices have just been under pressure for a very long time. That's because of the increased drilling that's taking place here in the United States and the improvements in technology. Is that picture going to change? Or are we looking at, even if all the demand comes back, even if China didn't have some of the issues it was dealing with right now, are you just looking at a world where $50 to $60 oil is going to be the norm?
Well, I think that for the foreseeable future, we're more likely to see prices like that than to go back up to where they were 10 years ago. It's the story of commodity markets, or technology, investment, efficiency. And I think we're certainly not running out, and everything has become much more economic and affordable as a result of the shale.
When you hear OPEC talking about reining in production, do you think that actually matters in a situation like this, or is OPEC just past its prime?
Well, OPEC plus some other countries now have managed to, I think, take supply off the market to try to keep markets somewhat in balance. And we have had a market that's been well supplied now for a number of years. They've been fairly effective at doing that. And I know the meeting this week and another meeting coming up next month, we'll have to see what they do. But, yeah, I think they still do have an impact.
On your earnings call, you did talk about, and in your earnings release, you said that you would be maintaining the CapEx that you had basically done the year before. Is that still the picture, even if the demand outlook changes for this year?
Yeah, we really invest for the long term. And so we don't swing our activities around until we see a long-term change. And as I said, we've built our company for the kind of an environment that we see today, so it really doesn't change our investment profile.
Good. Good. How's we don't need to get into that. Yeah, you're not playing.
I'm working.
You are.
This is one of my favorite stories here. Michael actually goes and caddies for his wife, who's a great player here.
8
I
under,
love that.
I think, right? Did you say 8 or 8?
We're 8 under. We're 8 under.
That's fantastic.
Twice as many as me.
I'm fortunate to be surrounded by remarkable women at work and at home, and it's my pleasure to support them.
Love it.
You're doing okay. You don't need. You can hope when you go out to a restaurant. Admittedly, she's a better golfer, better tennis player. You know, that makes a better appearance and everything. But you're CEO of Chevron. You got the.
I married up, Joe.
Tell me about it. No, I know. We know about that. And Quail too.
Yes, I married up too.
No,
Michael,
married
thank
up
you.
to you. He married up to you.
Michael, it's great to see you. We really appreciate your time. You too.